Okay, hello everybody. Welcome back. This is officially the second episode of our podcast. So, for those of you who are usually watching on YouTube, if you're tired of staring at my face for an entire 20 minutes while I talk about the market, you now have another outlet where you can just listen. And on that note, I'm wearing the headset this time. We're officially doing it. I'm a headset guy now because after listening to the last episode, which is now live on Spotify under the PTBO show, but we're going to talk about that in a minute. I noticed that I have a tendency to yell into this mic, so I'm going to do everybody a favor and keep this headset on so that I can monitor my levels. But let's talk about the podcast. This is the first intentionally shot episode that I know will be going up as a podcast. It will be on all major platforms, so Spotify, Apple Podcast, and Google Play. This first episode was up under the PTBO show, but the title's probably set to change, and I want to run this past you as the audience because I just can't quite make up my mind what I should call this thing going forward. So I'm going to go through a few show names after I do a brief rundown of what I'm going to talk about in the rest of this video. So this is the 7th of March. We do have the statistics from February. So we're going to go through market stats. This is the sort of monthly breakdown that most of you tune into most frequently. So we're going to go dive into February statistics, talk about how they compare to last year, what trends we can derive from them, and what they tell us about what's happening right now. We are going to talk about a little bit of macro news, which will be now, I think, a weekly trend. That's going to be something that we'll have consistent, is basically what, sort of global and federal, provincial news stories apply to our real estate market within the last week. So we're going to keep this video weekly. It's going to be similar to a market update on a weekly basis, but only this once a month will we have the full set of monthly statistics to dive into. And then on the rest of the weekly basis, we'll talk about basically the week's headline in real estate and what they mean. So if you guys want to catch up and keep along with the narrative and the trajectory of things on more than a monthly basis, we're going to have a weekly video that's going to be pivoting to just more of a market update on a weekly basis, sort of vlog style, a little bit less of the specific videos about an individual topic. It's just going to kind of be consistently market update. What's happening in Canada, Ontario, and Peterborough and our surrounding area, other small towns like us. What are the push and pull factors on our price movement in real estate? So after the macro news, we are going to get into sort of the trends and sentiment watch. So really just want to integrate this as a part of the show ongoing. I think that it's apparent that sentiment is as important as almost any other variable in what's going to happen next with our extremely financialized real estate market. And, if sellers are getting the impulse that the market has reached its peak and they had the inkling they were going to cash out anytime in the next 2 years, people tend to have the herd mentality. And once they sense that they might be missing out on the best time to sell, they'll all flood forward. And same thing, buyers can lock up right away. We're really going to try and keep a pulse on that because when it comes to cycles, and we've been on the large upswing for a long time now, and when we come to see a cycle end, because nothing can last forever, no one can predict the timing with absolute certainty, but one thing you can say with absolute certainty is that things will be cyclical, and there will be at some point a downturn here, and all that we can do is assess where we're at on a relatively tight timeline to watch trends and really see what people are thinking, because as much of what people are thinking is happening, whether or not it's based on true hardcore facts, if people think it and they're acting on those beliefs, then it is real, and the momentum can carry itself, and it could be what changes these trends above all else. So that's it. So let's, before we dive into the statistics, I want to quickly run through for everybody the options that we have up for the show names here. So right now we've got it under PTBO show, very, very obviously specific to Peterborough, but I do think that the way that the discussion is veering here is more to macroeconomic talk, and we're talking about stuff in Peterborough. We're talking about our own statistics, but really a lot of what applies in Peterborough. For anybody who's in our surrounding area, Millbrook, Lakefield, Norwood, Ennismore, we're going to study Peterborough to sort of look at what's happening there and all these small towns that surround us. And likewise, even though Peterborough is considered a medium size city in our Ontario and Canadian cities, in terms of where we sit in sort of total population, we wouldn't be classified as a small city or a small town. We sort of think of ourselves as small town because so many of the people that live in a city like Peterborough come from areas, Keene, Ennismore, and there's sort of this back and forth where a lot of people who live in Peterborough now at some point have lived on the peripheral, or they've been back and forth. So all in all, really the problems we face with growth are integrated with our small towns that surround us. And with that being said, I'm thinking about naming this the Small Town Housing Show, or an alternative, Small Town Housing Talk. And we've had a few other names, the PTBO Housing Show, Think Housing, PTBO. And I just wanted to put that out there for everybody. Feel free to comment and put your inputs, or shoot me a message, shoot me an email. What do you think the show should be named, the podcast, ongoing? And I think we're leaning towards either Small Town Housing Show or Small Town Housing Talk right now. So that's how you guys will be able to find this going forward once we solidify it, hopefully in the next episode. So enough with that. Let's get on to the statistics. So I want to give a quick snapshot because these 1 week snapshots are great. The 7-day outlook in the county of Peterborough under residential activity. On our system, when I logged on, this was from about 3 days ago, we had 64 new listings and 59 sold. If you remember back to last week's show, I had mentioned a statistic where there was a similar 7-day period where there was quite a drastic difference in the amount of new listings versus the firm sales, indicating that inventory was starting to move up as a trend. And in the last 7 days, virtually no movement, only a net of 5 new listings, over 64 sales, or 64 new listings. So really, we're seeing the buyer demand sort of keep pace with the amount of new listings. So on to February statistics. Price. February's average price in the city of Peterborough, not the county, the city, because you're going to see the county price quoted in the newspapers and some headlines. But I like to focus the most on the city because it doesn't incorporate the waterfront, which really drastically skews how you're going to view what's happening to the average home, the average dwelling for someone who's going to live and work in Peterborough. So average price, $776,000. That's up 29% year over year, which is more or less on pace with the national average. Many months we have exceeded the national average. Obviously, that's still massive, huge growth. But how does that stack up on a month-over-month basis? Okay, so the price in January was $761,000. So that means that we were still up, albeit in the face of all of what people have deemed to be a little bit less activity on bidding wars, at least down in the GTA. And we have seen a bit of sentiment shift here in Peterborough. But last month, average price $761,000. That means we're up almost 2%, 1.9% on a month-over-month basis, which puts us on pace if we were to maintain that for a 22% year-over-year set of gains, which we don't think is likely going to happen, at least not in the 6-month picture. And don't anticipate that pace to keep up exactly, but still a strong gain on a month-over-month basis. Bearing in mind that in these winter months when we don't have as many total sales, it's easy to get this misconstrued, and we don't want to call a trend too early until we see a couple months reinforcing that number. But nonetheless, still huge sales numbers. So the average price, very strong for February. Active listings at the end of the month, 71. So in 2021, there was 68. So only a difference of 3 active listings between February 2022 and 21. Total sales 106 this past February, 101 in 2021. Months of inventory is 0.7 months, and in 2021 it was the exact same. For those of you who haven't been tuning in or you're just new, I can post the months of inventory video up here that I've done a bit of a description. If you haven't been following along, that's our metric that we use as sort of tracking the pace of the sales. And as I discussed in the video on months of inventory, this metric we have to take a bit of attention to. Sometimes it's almost a second derivative, meaning the rate of change of the months of inventory, whether it's going up or going down, not so much just the months of inventory in and of itself, can be a little bit more of an indicator about what's going to happen in the short term in terms of price movement. So simply put, if inventory is on the rise, if the amount of inventory is on the rise, even if the total amount of inventory is still extremely low, sometimes you can see prices soften on a month-over-month basis. But 0.7 months of inventory, extremely low inventory. For any glimpses that we've had where inventory might be going up, we see this as the end of the month number. It tells us that things are still at historically low levels. And unless we see drastic increases in inventory versus sales, prices will still be going up in the short term. So basically, this January and February right now are more or less carbon copies of what happened last year. Now, last year, March, this sort of ripping price trend continued right through March. Everybody out there is sort of suspecting that this time is a little bit different, because last year in March, we still felt that strong sense of fear of missing out, and really starting to feel that slacking off week by week here right now. And there's much different news coming out of the GTA in terms of the amount of people cancel, relist higher, not getting offers on their bidding wars, or not getting as many offers they wanted, not hitting the prices they wanted. So there's sort of this new phenomenon where around the GTA, it's not so much price changes are people doing price reductions for overpricing. It's people canceling, relisting higher because they didn't hit the mark, or the seller didn't hit their expectations on offer night, and they're relisting higher. We're seeing a lot of that right now. It hasn't quite made its way here yet. We're seeing isolated examples. As a whole, we're still much stronger. But as many of you who've watched have sort of understood, and we've likened this to before, is that what happens in the GTA, it's sort of the epicenter, and everything ripples out. Just as, you know, if you were to drop a cannonball, a meteor, whatever you want to call it, in the middle of the ocean, the way that those waves, that energy would ripple out, it takes a bit of time, but sure enough, what happens there, it moves through. And so what happens down in the GTA core with their detached residential activity starts to ripple through, head east through Durham region, and then moves to us. We sort of feel it last, but sure enough, if things slow down there, the slowdown is coming this way, most likely. So that is sort of where we're at right now. February was extremely strong. If it's anything like March of last year, if the trend continues, look, we're at almost identical sales numbers, we're almost at identical inventory numbers. If this March is anything like last March, then the price increases will continue. But there's a few different factors at play. So let's get on to that. So we're going to have to be visiting back in on what's happening in Ukraine on a somewhat regular basis, I think, right now, to keep tabs on how it is affecting us here as Canadians, and specifically in terms of those interested in this show, how it's going to affect our real estate markets going forward. So a couple of notes on Ukraine. Right now, because when we talk about the week's news, we talk about the week's news in real estate. Really, when it comes to the week's news, Ukraine dominates the news feeds right now. Myself, I typically get the bulk of my mainstream news through the Globe and Mail, and I know through that it's just been flooded. It's hard to find a story about anything other than Ukraine. It's understandable, but just want to mention there's a couple of things that are very important to note about that. Is one, the pressure is sort of off the housing market right now in terms of the government's, urgency to have to do something to save or fix this situation, because all of a sudden there's a bigger problem. the focus gets shifted, and you can see it in the way that the media isn't reporting the real estate stories as much anymore. And as soon as things slow down globally and internationally, and there's not these big crises, the headlines all shift back to real estate, as people's Canadian pastime. But right now, the focus is on Ukraine. So we're going to potentially see a bit of slackening off on the battle on the housing crisis for the time being, because so many government resources are focusing towards Ukraine. We're starting to see already that immigration. I saw a headline this week that I can post here that it sounds like they're going to allow basically an unlimited amount of Ukrainians into Canada. So what does that mean specifically? I haven't seen anything, because I did try and research and look for a specific hard quotation saying that they're going to up their immigration quotas. I haven't seen that yet. So I think that the number for this year, I believe, is right around 430,000. It seems like it's staying the same. But the verbiage there, unlimited amount, I don't know. Maybe they are going to move it up, which is what we suspected from last week's video there. And if they do, obviously that is going to put some ongoing demand side pressure on our rental markets and our housing market. So let's talk about interest rates. The Bank of Canada finally did raise rates quarter of a percentage point there, or 25 basis points. And there is a lot of talk going on right now that they might get one more hike out of their, people talking between 5 to 8 rate hikes this year. But there's a lot of conversation going on that they likely won't get as many hikes total this year as they originally anticipated. So this is a multifaceted discussion, because one, we're having extreme inflationary pressures based on everything going on with the trade wars now with Russia. Oil prices, the price of gas at the time that I'm shooting this was at least in Peterborough here anyhow, about $1.84 a liter. Extremely high prices. We're seeing $2 over in BC a liter. And so the inflationary pressures are extremely high. So this is problematic, because right when they, the inflationary pressures are based on supply constraints, not so much economic growth. And so this is a time when they're going to be very leery about clamping down on everything. And the economic uncertainty is definitely there. So there's a lot of speculation we will not get all our rate hikes in, and the Bank of Canada might lose its trumpet on their ability to forward signal that the cost of money is going to be going up. So keep a close eye on that. But that's really one of the biggest factors why people were talking about why the market might sort of mode down and gear down this year, is because the rates are going to be going up. But there's a good chance they won't be going up as much as anticipated. Secondly to that is that the rates, they've gone up an extremely modest amount so far. Of course, it represented a total doubling of the prime interest rate. But most people's payments will not change right away. Most of the products out there are structured so that the interest portion will change. That just means less principal paid down each month. But a lot of people aren't actually going to feel this until their term renews. Now, many will. I know my own personal mortgage, I'm going to see a higher payment next month. But for a lot of people, they're not actually going to feel, even if the rates were to get cranked up another couple of consecutive hikes here, then a lot of people aren't going to feel it until their mortgage term renews if they're on a variable rate. So let's talk about the trends and the sentiment. It feels right now many sellers are worried and starting to call the top. We talked about this briefly last week, but it seems like a lot of people are ready to pull the parachute out here right now and just say enough's enough. And a lot of people are having the jitters about how quickly things have rose. And even if all the major factors are pointing towards, hey, low interest rates for longer than we expected already, potentially higher immigration, supply chain bottlenecks, which could hamper construction, headlines that are able to let the housing rhetoric kind of cool down a little bit. All these things are pointing towards potentially price pressure upwards. And at the same time, a lot of people are feeling, they just have this gut instinct that they want to get out now. getting a lot of that sort of the herd mentality that people are wanting to sell, and that buyers are taking a little bit more of a wait and see approach, at least, in Peterborough here. And it seems that the GTA folk moving out this way don't seem to be as concerned. Still, things are so relatively affordable here versus what they might have sold for in the GTA. We're not seeing as much slacking off there. But overall, it's worth mentioning that the sentiment right now does seem that the sellers are looking to cash out and the buyers are starting to look to pause. At least those discussions are really starting to become the overwhelming ones that we're hearing, or the types of questions we're hearing from people. That being said, I just wanted to say, hey, if a lot of people are starting to ask short-term questions about what's going to happen, even though they really should have a long-term outlook based on their housing needs, if you got short-term goals or short-term picture of when you want to move or what you might have to do, go ahead, make short-term predictions. But if you have long-term needs, don't get caught up in all this stuff. If you got long-term needs, make long-term predictions. Don't lose sleep every night following the latest headlines. Are we at the top? Should I cash out right now? Don't displace your family, to go rent something if you don't have any other need to sell or move within the next sort of 3-year period, because there's so many things that can happen and no one can truly predict what's going to happen right now. There's fierce debates going on out there about what's going to happen next, and very intelligent people are on the opposite side of this argument. So there's no one right way to look at this, and the model under which you analyze what's going to happen next is an extremely complicated one, and nobody's got the master key on this. So there's people out there saying that immigration is absolutely the number one overarching factor on this, and arguably it's still pushing. The headwinds there are strong. And there's other people that say that the interest rate is the number one most important thing. And it's yet to be seen what's going to play out with that, whether it's actually going to be a factor based on what happens over in Ukraine, and whether we actually see the rates rise like they were said to be. And then there's also people that say, hey, sentiment is the number one thing. And if we follow that, it says that we really could be heading for a turn here. Okay, just want to double back here. A couple of things I missed. Sean Fraser, Canada's immigration minister, basically saying that he doesn't want people to lose their palate for immigration. They know that this is already starting to become something that they're worried about in the face of a lack of affordability. But in the articles I read about how they're upping their immigration, each time housing kind of gets cast off when they talk about it. They basically just say, well, we need these new immigrants to add to the labor force to build the houses. And everyone's sort of dancing around the fact that, where the rubber meets the road at the municipal level, it doesn't seem likely that we're going to be able to hit the amount of units needed to house the targets that we're shooting towards. So whether or not prices do continue to rise, or whether they fall on account of interest rates going up or the cost of money getting higher, so the absolute affordability of real estate going down, I still think that relative affordability is not a good picture either way, because right now the way it looks is that the only way that prices do drop is if rates continue to rise and the cost of ownership, basically your monthly payment, just continues to buy you less and less house, because we just see that there really isn't much effort to address how the immigration and housing pictures coincide. That kind of is getting cast off at every conversation about immigration. So overall, final message: no need to think the sky is falling. Hikes likely won't come as quickly as supply, and overall, it seems like our core fundamentals of supply and demand are still out of whack. So that's it for this week. Thank you very much, everybody, for tuning in. If you are watching this on YouTube and you don't subscribe, please subscribe. If this is your first time checking this out in the podcast version, please feel free to give us a rating or share with your friends that we're here now up as a podcast, and that you don't always have to catch it on YouTube. Don't have to watch that full video. You can just hit the audio while you're walking. And thanks so much to everybody for tuning in. One last message. I had the privilege of visiting the Rockstar Real Estate crew and jumping on the Your Life, Your Terms podcast there last week down in Oakville, and I was lucky enough to receive my own copy of the Bitcoin Standard from Mr. Tom Karadza there. So thank you very much. I've got my Your Life, Your Terms t-shirt, and was really impressed and amazed to see at how they're running their operation, and inspired to continue just bringing better content each week and really focusing on this podcast to help keep everybody informed on a weekly basis. So thanks so much, and we'll look forward to catching everybody next week. I'm going to continue to record, hopefully at the start of the week, ongoing now, instead of seeing these videos come up on Saturdays and Sundays. Hope to shift it more towards Tuesdays or Wednesdays and establish a regular day of the week as time goes on. Thanks so much, everybody. Have a great week, and we'll catch you next week.